Good morning, Trade Pros. Welcome to our morning market update this beautiful Friday, February the 20th of 2020. What year are we in? 2026. I hope you guys have a great day, and I hope you are having a great ending to the week so far this morning. And this is the last trading day of the week, so we got to nail in a good day and then go about our time off on the weekend, doing things we love with people we love, having fun, and spending the money that we hopefully made. All right, so nothing like starting with a cough on the morning market update. That's great. Oh, there's another one building. Oh my gosh. All right. Let's start off with the most important thing this morning. Early on the wire, we had some news events come out. I could summarize them for you as softer growth, economic growth, and softer inflation. So kind of a mixed bag of nuts there. It would have been better to get some strong economic growth and softer inflation, but these two numbers do actually help dovishness in the Federal Reserve, meaning we could expect some rate cut odds to start increasing heading into the next meeting. All right. U.S. core PCE prices, which is an inflation look, were slightly lower than expected. Real consumer spending was way lower than expected. That's kind of a problem. 2.4% quarter to quarter versus 3.5 previous. All right. GDP sales were 1.2 versus 4.5, and the GDP price index was 3.7 versus expected 2.8. These events have so much data attached to them. There's so many sub reports for that one report that it was just all over the map. But I just wanted to kind of just give it to you in the two sentences. Softer than expected inflation, which is good for the Fed, and softer than expected growth, which could kind of push the Fed to be dovish as well. So that's kind of where we started this morning. The market was on edge waiting for those reports, that economic data. That's out of the way. Equities are weaker this morning, and overnight we're trading near the lows. All right, European bourses did bounce back a little bit. All right, but at the end of the day, there was one headline that sort of ruled the markets yesterday, and that headline stopped the rally in its tracks. Well, that headline first started the rally, and put a lot of bid in the market, but then he raced it with further commentary, and that has to do with Donald Trump and Iran. Remember, um, when I speak about this, I'm not speaking about it from a political angle. I'm not speaking about it anything more than what matters for the market. So please, my goal here at TradePro Academy is always to bring people together. I don't want to make this political because number one, political stuff divides people, and I love you guys. And I bet you we agree more on way more things, even with the people we think we disagree with. If we just gave each other a chance to be humans and discuss things openly. And number two, I don't really care about politics. It doesn't really impact me that much. All that I really care about is how will it impact the trading that we have to do and how will it impact my family, and then I get to make my own decisions based on the stuff. But okay, I don't want to argue about the stuff when I talk about it because it I always give you a little pre-disclaimer about myself before talking about anything political, because it's not the intended purpose of Trade Pro Academy. We don't have a stance. Our stance is let's bring people together and trade together. All right. So Donald Trump yesterday did say that he's not considering military action and he'd rather do this through meetings with Iran. That gave a little bit of life to the bulls in the market. We rallied up. And then he went on to provide threats that if it doesn't get done, they're going to get hit like never before. The language changed throughout his address and the market turned. It's important to note that this is a really big headline and we're going into a weekend, and institutions have to hedge their position over the weekend because there's political risk that might impact their portfolio. And so this is what directly the impact is how do you adjust? If you had a $2 billion fund, how do you go into this weekend protected enough to not get clobbered if anything goes wrong, but also not spend so much money on protection enough that if the market goes up, you could be justified in front of your client. The client says, why is it going up without us? Oh, well, I spent all of our cash protecting the portfolio. Protecting it from what? The market is up. Yeah, but it wasn't on Friday. Yeah, but this is why I pay you as a fund manager to know these things. Do you want this money or not? And this is the challenge that institutions are facing at the moment is how do we hedge out this risk when the goalposts keep moving and the risk is changing. This is a challenge. You think it's hard day trading? Imagine being a portfolio manager in today's day and age. All right. So Donald Trump is now saying that he is considering an initial limited strike on Iran to force a nuclear deal. Kind of like not a full scale attack, a little bit of a pressure attack, but what the fear there is this could escalate. It still has the potential to escalate. A small attack or a big attack will have escalatory pressure on the market. And so we're sort of back into a little bit more of a fear mode, risk off in the marketplace because of that. And bulls are already failing to hold rallies. And this kind of just put too much pressure on their back. All right. He said if authorized, a strike could come within days, targeting select military and government sites. If Iran still refuses, the U.S. will respond with a broad campaign against regime facilities. And then Trump reiterated 10 to 15-day deadline. So something bad will happen if no deal, or the exact words. Still prefers diplomacy, but the window is closing fast. So as this changes from the current point of what I just said, the new risks will have to be reevaluated and rehedged. And one thing it's doing is it's forcing institutions to kind of just wait and see, but then also take action to hedge. New information comes out, they got to unwind the hedge or overexpose it. And the good thing about all that is it creates trading opportunities for us within those movements. You have more higher volume participation by high institutional players that need to take corrective course and action very frequently as the information changes. That's the edge. That's the benefit we get out of all of this. All right. The key data today was GDP, PCE. We looked at that. We have flash PMIs for February at 9:45 in the morning. We have SCOTUS opinions at 11 a.m. This is going to be very interesting. The courts may rule on Trump's tariffs. Um, if if that drops, they don't have to, but it may be on the list for today. So at 11 a.m., keep your ear peeled to the wire, because if they make a ruling on the tariffs finally, then there's going to be some really big volatility, dramatic volatility. Be very careful. It has potential to become a really big event on the last day of the week, heading into a weekend with already headline risk to hedge out. And you already know what that means. That's why I went so deep into it, because this is a second instance where now you understand, well, institutions might have to reassess risk and rehedge, which could cause a lot of volatility and volume at 11 a.m. Chances are it doesn't get discussed, but if it does get discussed, it's a really big event. So it's like the tariff ruling, right? Watch out for that. Watch it at 11 a.m. You'll find out very quickly if it'll be on the agenda or not. But 11 a.m., mark that on your thing today. And as we get close to it, the market might start to get nervous. You might actually start to see some of the hedges going in before 11 a.m., like 10:30, 10:45. We'll see what kind of volatility we get, but we'll also see what the auction looks like, because no matter what you do in the futures market, this is why we trade the futures market, you can't hide. You're going through the same order flow. We're going to catch you. We're going to spot the order. No matter how you try to mask it, it will show up on one of the things we look at. It's the beauty of order flow trading on S&P 500. It works. It's a deep institutional market, and this is why it works the best on the ES futures. All right, oil's pausing a little bit, but still elevated. I traded a G-Wagon and an S-Class Mercedes for the new Hyundai Palisade for my family, and I noticed it pumping gas in the Palisade, and I was like, geez, this is good timing. The S-Class would have eaten up a whole lot more gas than this, but prices are high, 65.86 to $67. This is the range. It's elevated, and Iran's obviously outcome is going to have big influence on what's happening here. All right, gold's holding above 5,000, up 0.6%. In the FX space, the dollar index is up 0.1%, so reversing some of the weakness it's had recently. Japanese yen is the big thing we're still following. US dollar Jap yen pair is up 0.3%, which means that the yen is down, which is good news, because Japan may not have to do intervention. Anything above 160, which if you guys remember, the Federal Reserve in the United States stress tested Japanese currency intervention and outcomes from across the world. They stress tested what it would mean to them. If that's how important it is, it made it into a Fed meeting, this discussion. Japan CPI for January came out slightly softer than expected, which is good. It puts a bit of a dovish skew, which is great for the rate. That's why it's Japanese yen is off 0.3%. US dollars up. Watch that 160 level on USD Japanese yen. I think we exceed 160, things start to break. All right, fixed income 10-year yield is a 4.71. It's not really big. Nothing's happened there. Crypto's down up 1.9%, back above 68,000. Hallelujah. Crypto traders are back in the upswing of things. We're definitely going to see the Ferraris and Lamborghinis with crypto plates down in South Beach. That's going to be great. Um, SCOTUS today, crypto. That's all we got. Let's turn around and look at the charts. I'm not even going to be in South Beach today, so I probably won't see it, but I'll rely on my South Beach friends to tell me about it. All right, so um, let's take a look at. You're probably seeing the back of my head right now. You don't want to see that, more than likely. And I will share a screen for you, one that I've kind of sized out to make sense. There we go. All right, the trading plan for today then, ladies and gentlemen, is, and I'll look at the comments on YouTube and our trading room in just one moment. Let me just stretch out these notes. This is what I read off of, and I've just kind of trained my eyes to pick off what matters. I don't practice it ahead of time, just read it out. All right, trading plan. This is the trading plan. Well, let's not get straight to trading plans. Let's do the stories. The story of US yesterday is this. We opened at 68.71 quarter. All right. And this is the open price that we see right here. Okay. And we see some early sell pressure, which is good because yesterday we were on the sell side of the trend. All right. And then we rallied upward out of the sell pressure. This is what I was talking about. It was a pretty strong bid. All right. Trump goes in around the 68.80s and says, we're not considering military action. Not directly in those words, but that's what the implication was. So the bulls got excited. We hit the 68.90 and the prior day high was set at 94.5. Now, you know that because it's a prior day high, what's about to come. We were working this level for trades. We got some of this downside here and here on the retest, the second and third time. I don't know if some traders followed through with it or not to extend it. I didn't run it too much lower than 73. All right, it was still a good trade. Nice downside, and then the day kind of came unglued. We started to sell off, and we pushed lower to form the prior day low at 68.47 3/4. Let me just, yeah, it's right there. Zoom out a little bit. 68.47 3/4 was the prior day low. Then we rallied off of the lows and we went in back to the opening range, sold off to the low. We couldn't break the low a second time. You knew what was kind of set up to happen here. After that, here comes the buy stops. The buy stop rally took us all the way to the prior day high of 94. Wait, no, it didn't take us to the prior day high. My bad. It took us all the way up to the 78.5 where we closed for the day. So basically, if we can kind of chalk out this day and after the fact, say early weakness, some buy pressure that failed. All right, and into the afternoon, we recovered pretty much where we started. So it was sort of a sideways consolidation. It was an inside day to the prior day, but the prior day cash close was slightly above the open range. All right, volume on the day there was about 1.29 million. It is the fourth consecutive lower volume day and the lowest volume we've had in 5 days. So we are narrowing in volatility. We're narrowing in on price movement, and volumes are decreasing as the market looks for direction here. All right, this is a big consolidation on a multi-day, multi-week phase now as well. We haven't had new all-time highs, which newer traders are probably freaking out. Like, how am I supposed to operate without new all-time highs? I thought we got them every day, every week, at least one new high. Well, not always. You could stay in this kind of range environment for a whole year and a half. Try that. I've seen that as well. Well, you could be in this a downside environment of all bearishness for a year and a half. Takes a lot to be in a bearish environment for a year and a half. I don't think we have the spark for that at the moment, but we have a lack of highs, which is fear being priced in. It's how institutions are choosing to manage their positions, and it's reflecting now in the volume drop-offs, and the daily range is only 46.75 points, where it's normally 80, 90 plus points. Okay, so we're contracting the volume. So the story overnight is slightly different than I'm going to read it here because it changed by the time I wrote it, and it might change by the time we open too. But the market reopened on Globex on a pretty nice bid. Slight weakness on the open, but then we bid up and through the prior day high to go and set the overnight high at 475, 0475. And this yellow big box here is our FZ. That's our flip zone. And our flip zone means we are short below, long above. And my goodness, this went right to the middle of the flip zone and down it goes. But it was in the European market. So overnight high was set right into our flip zone at 475. That's great confluence for later on. If we exceed it, that should become a good support. All right. But we set the overnight high about 10 and a quarter points above the prior day high, and it looked good for bulls for a moment before we reversed this thing sharply lower for today. All right. And then the overnight low was set at 60 half. It's now 51 quarter and dropping. We're almost on a low tick. So we could get this lower for the open. We're about 6 points above the prior day lows, and I think bears could crack and open up this downside for us. All right. um, we'll talk about that in a second. Volume so far is 190,000. It's picking up. It was at 142. It's still low relative to where it typically is. It should be around 200K at this point, 210 and 250 around the open. Um, but but it is picking up. Volume is picking up as we're coming down into the lows, which means we're attracting participation on the sell side. Gives you a clue already. So here then is the trading plan, guys. Bulls keep failing to hold expansions. We've seen it over the weeks, and now we're failing to hold expansions above lower levels, which means the whole auction is moving lower. All right, today it's key for the sellers to break this low of 47.75, and it's key to break it, not just like a little cute break and go back in the range. That would be a liquidity trap setting up for some buy stops. It's key to break it, retest it, and just hit it harder. Just take it out of the ballpark, and every retrace should continue to get hit lower. If you see something like that, bears are in firm control for the morning. All right. I'm still holding my flip zone, which means I probably won't be long today. If it gets all the way up to 04.75, I'll consider switching, which means I'm going to look to sell some rallies or ultimately the break and retest of the low. All right. Break and retest of that low would be another setup scenario that I don't have in here, but the rally levels to sell would be the 80. Remember, I was prepping this as it was trading 74. Would be the 80, the 90, and the flip zone at the 04. Those are the three levels that you see would be the three areas to try. And then the last one's always a break of a low and retest if we see the right conditions. I can't help but feel like we're going to open this thing on a liquidity trap. We're going to rally it back up to the 80 or the 90, one of the areas that we have here on the resistance and the entry levels. I think we're going to get up there on one of them. It's going to look super spectacularly bullish. Everyone's going to get so excited and buy the top, and eventually we're going to work the downside trade. I just get this sense because we're opening so close to a low that I think the natural next step would be to open strongly up. Just push it up and catch everyone on guard, wipe out all the buy stops from the sellers overnight, reset the downside trade, and allow the big liquidity to come in on a buy wave to start working their entry to the downside. That's how it always goes. You can't really sell big quantities down into the low because everyone's selling with you. You're all competing for the same thing. But if you let them have a chance to wipe some buy stops and everything looks bullish, you give them hope. You got the buyer. You could put in your big sell order, and then you give them rope, and down we go. So, um, I can't help but feel like this is what's going to happen. However, I could be wrong, and if we don't get down to PDL and we don't break it, I might be done for the day. I don't want to fade the downside momentum today and join the buy side team and pretend the long side was the right side the whole time. I don't want to do that because the risk here is that by the time you get convinced to join long, it's actually the perfect time to sell it. So I'll stick to my edge. I'll stick to my plan, even if it means having to have more patience, even if it means I'm not in the first 6 minutes of the market open. All right. And possibly if I don't even have a trade today because this thing just keeps ripping, I will stick to my discipline and the approach and not look to fade early weakness in the market. I can't. I won't. I can't. I refuse. Last but not least, gamma levels. I'll read them out for YouTube too. Now look at the comments and we'll start the day. And we'll do a run through some other stuff with the TradePro team in the room. We got to review the trade plan and the next best trade ticket. And we have to look at some TPO stuff really quick and MBO and some liquidity levels overnight. So we still got a lot of work. But the high volume level is 6,900. That's kind of the flip zone for Gamma as well, which is up there with our flip zone level, 6,904. We're at 4 points higher. One day max is of 69.47. One day min is 68.06. This is off of Gamma. Net GEX is minus 100 million, meaning that dealers will be chasing moves when we get to and break through their gamma levels, which I still have to clip and show to the team in the room. Call resistance, we got a lot at 68.95. I love it. I love having a call resistance wall right below our flip zone because it naturally suppresses the bull. All right. And by the time we get up to that level, we're just 5 points away from the zero gamma, which means gamma probably won't be negative anymore, and the dealers will not have to chase the move up. So it's almost dealer positioning is almost skewed to the downside today, no matter how you look at it. And if we do get a strong rally, dealers have to start fading. If we don't get a strong rally, dealers have to start participating to the downside by selling futures. That's that's the kind of setup that I like. That gets me excited. YouTube, let me just look at questions real quick. Good morning, Prashant. How about the USA? Ladies, go America. Good morning, Joseph. Is George being a woke liberal but mega? Oh no, Prashant. I'm both of them. I see the value of the opinions on the left, and I see the values of the opinions on the right. And I ask myself, what would be better for my kids' future? And I think about it reasonably, and there's certain things I like and certain things I don't. I'm what I call myself to be, hopefully, a normal person. I'm not on either side. Prashant, um, where are you finding the SCOTUS opinion release schedule on News Squawk, sir? I hope you're well and good luck on the trading session. Guys, I love you all on YouTube. Thank you so much. We'll be back on Monday. And yeah, we'll be back on Monday. Have a wonderful weekend to you and your beautiful families and enjoy the time and just be careful today on today's session. I get a sense it's going to have opportunity, but we're going to have to live through a little bit of chop and mess before we go and clean it up. All right. Take care, YouTube. Appreciate you, and we'll catch up with you on